Do you want to securely cash out your crypto in the next 6 to 12 months? I've helped clients with millions in crypto open accounts at top banks in Switzerland, Liechtenstein, Singapore, the US, and many other countries, giving them the freedom to cash out whenever they want, to leverage their portfolios, and even to lower their tax bills, no matter where they live in the world. So in this video, I'm going to be sharing 27 lessons that I've uncovered while helping our clients. That way, you can cash out your crypto 10 times easier and faster. Lesson number 1. All right, do you know what kind of crypto profile you have? See, most people who come to us, they fit into one of 3 categories, which are early adopters, traders, and black market buyers. Now, we can help people in each of these categories open accounts, but early adopters and traders are significantly easier to help, and that's because they have 2 things. First, they have an easy to understand story, and second, they have a paper trail. Now, I'm going to cover both of these in detail in a minute, but first, let's talk about black market buyers. These guys are typically libertarians who've been buying Bitcoin in the parking lot of their local co-ops. They hate banks, they hate government oversight, but maybe they need a bit of cash. So they're looking to cash out some of their crypto assets. Now, the reality is these guys are going to have a very hard time finding banks, especially when compared to early adopters and traders who can explain their wealth, show receipts, and even have account statements and a straightforward profile. And that's why lesson number 1 is that your crypto profile determines your options for banking. Basically, how you came to own your crypto is going to have a major impact on the banks and the countries that you can access, and even the process that you're going to have to go through to open accounts. But maybe more important than your profile is how much crypto you have, which is why lesson number 2 is all about the amount you're looking to cash out. See, if you're serious about cashing out crypto, you need to be starting with an absolute minimum of a few $100,000 US worth of crypto. Though even then, your options are going to be limited. If you're coming in with less than that, say $50,000 to $100,000, then cashing out in one lump sum through a single bank probably isn't going to work for you. Instead, you'll need to squeak through retail accounts or maybe use debit cards linked to exchanges in order to access your money. Because the banks that facilitate cashing out, they're not interested in low deposit accounts. Instead, banks that facilitate cashing out, they typically look for 1 million as an absolute minimum, though 2 million to 5 million is going to open up more doors, which means access to more sophisticated banks, bankers, products, services, and benefits. And that's why lesson number 2 is that money matters. Just like in private banking, the more money you bring to the table, the more options you're going to have. And as you may have already guessed, a lot of these banks are located in a few key countries, which I'm going to be covering in lesson number 4. But if you just want our team to tell you which options you can access right now, you can fill out a free assessment using the link in the description. You fill out the form and our team will get back to you in 24 hours. It's that easy. Okay, now I want to stick on the topic of banks for a minute because even huge amounts of money won't open doors for you at all banks. And that's why lesson number 3 is all about the 4 levels of crypto banking, because not all banks want clients with crypto sourced wealth. And even fewer banks are then suitable for you to cash out and continue to hold significant wealth with. And the easiest way to visualize these levels is through a pyramid. All right, so here at level 1 are the banks that don't even notice crypto. They're basically sleeping on the job. They just let transactions slide, never review client activities, and attract the wrong kind of customers. Now, you should avoid these banks. Not just for crypto, but in general. They usually end up in investigations, have horrible correspondent banks, and can cause a lot of headaches with lost transactions or compliance issues in the long run. Plus, they're usually based in countries that you're better off avoiding when it comes to banking. All right, now the level 2 banks are the ones that knowingly let crypto slide. These banks, they tend to be in countries with a lack of regulatory clarity. Transactions will usually go through, but sometimes they get blocked and accounts will get closed. Again, not a great option because whether your account stays open depends on the compliance officer or the account manager that just happens to be looking at your account activities. It's not exactly a long-term solution. Now, the level 3 banks is where things start to get interesting. Here, you have banks that cautiously welcome crypto clients, though they typically don't have the complete back office or internal systems in place yet to support crypto source wealth. Basically, these banks are dipping their toes into the crypto market. They're okay for really low risk profiles, or if you have low deposits, say a few $100,000. Then there's the level 4 banks. Now here, we're talking about banks that actively want crypto clients. These are banks that offer unique crypto solutions. They allow direct deposit and custody of crypto. They'll have in-house teams that specialize in cryptocurrency, and they even have their own crypto compliance functions. And depending on the country, they may even offer staking, lending, and direct trading. Now, as far as crypto banking goes, these banks at level 4, they're the gold standard, and they'll give you the most flexibility and the most options in terms of what you can do in the future. Now, not surprisingly, each level of crypto banking has different requirements, accepts different clients, and is easier and harder to access. So the lesson here is simple. The level of banking you want will determine the requirements you need to meet. And it will also change where you end up opening accounts, which is why lesson number 4 is all about the countries where you can open these accounts. So let's bring the pyramid back up. Now, in reverse order, starting from the top. The level 4 banks that actively want crypto, they tend to be in sophisticated banking hubs, and they tend to be banks that are capable of onboarding complex client profiles. These are your private banks in places like Switzerland, Singapore, and Liechtenstein. Basically, they have in-house capabilities to onboard crypto source wealth. And if you plan to bring enough money in, then they're willing to do the work to get comfortable with your profile. Now, the level 3 banks, these are the banks that cautiously welcome crypto. They can be found in places like the US, Panama, a few European countries, and Singapore. You'll also have a few broker-dealer options here as well. And the level 2 banks that let crypto slide, these can be found basically anywhere because it's totally dependent on who your banker is, what your compliance teams are willing to let slip through the cracks, and we've heard of banks doing this in basically every country. But as I'm going to share in a minute, these banks are facing a lot of changes, and they're really tightening how they treat crypto. We've seen this in places like Georgia, and as everyone already knows, there's a lot of changes currently unfolding across the EU. I'm going to be covering this more in the next lesson. And now, finally, the level 1 banks, well, these are the ones that don't even notice crypto. These are in shady countries you shouldn't be banking in the first place, basically places with $500 to $1,500 deposits that aren't suitable places to keep your money ever. So the lesson here is pretty simple. The best banks for crypto are in the best countries for banking. And obviously, each country will have different requirements, restrictions, and even laws that can impact both the application process and how you can actually open and use your account. And like I said, these laws are changing fast, which is why lesson number 5 is all about how laws and regulations are changing. Now, you've probably seen the headlines. Different countries are tightening their policies around crypto, imposing new reporting requirements. And the OECD just introduced new crypto asset reporting frameworks, which many major countries, many major banking hubs are already signing on to, which will come into effect in 2027. Basically, governments want to know if you have crypto and how much of it you have at any given time. And that's going to result in extra reporting requirements for you, exchanges, other service providers, and it will likely result in an even harder time opening traditional bank accounts. Now, the EU is the biggest culprit so far. Their new crypto asset reporting framework is coming into effect January 2026, and it's apparently going to be imposed on both EU and non-EU exchanges, and it could have serious implications for banks and whether they're willing to receive transfers from different exchanges or not. Georgia is another country that's seen a lot of change. Banks here used to cautiously allow crypto-related transactions, but after new AML laws that were introduced in 2024, crypto transactions have become a lot harder to send and receive. And this matters because it means opening accounts and cashing out crypto is becoming increasingly difficult. So if you have any interest in cashing out some of your crypto, you should try and establish relationships with suitable banks now before regulations come into effect or get even tighter. And that's why lesson number 5 is open the best accounts possible while you still can. Because you never know how regulation is going to change and how it's going to impact the relationship between banks and crypto, limiting your options. And that brings us to lesson number 6. Actually, lesson number 6 and lesson number 7 are both about a very important topic, you. And they're probably the two most overlooked steps when it comes to cashing out crypto. You see, every applicant is different. And if you're a serious applicant bringing in a few $1,000,000, banks want to know how you came to accumulate this sort of wealth. Now, I'm not talking about your source of wealth here. I'm talking about the catalyst that got you into crypto in the first place. For example, let's say you're an IT engineer who's worked in financial services for 25 years, and you got into crypto in 2013 after hearing about it on some online forum for IT professionals. You decided to invest a bit of money, and you just let it sit there. Now you're rich. Now, that story is going to make a lot of sense to banks, and they'll be happy to open an account for you, assuming you can overcome the other account opening requirements and compliance checks. But let's say you're a freelancer. You don't have a technical background. In fact, you don't really have any concrete employment history in any industry at all. And it doesn't look like you've ever made more than a few $1,000s per month. But you've managed to trade your way to a small fortune in meme coins over the last 12 months. Is it possible? Yeah, of course it's possible, but it's not exactly probable. And banks are going to be very skeptical with this sort of story, which is why you need to think through your story and be able to clearly communicate it to the bank before you apply. And you're also going to need to back it up with proof. So the lesson here is get your story straight before you apply. Because if you don't, you're probably just going to get rejected by whatever bank you end up applying to. But there is another part to this story, which is why lesson number 7 is all about what you plan to do after you open the account. You see, too many people just want to use banks like a one and done off-ramp for their crypto profits. But think about it. Why would a bank want this? How does it benefit them? It doesn't. The bank doesn't benefit from onboarding a client, letting them cash out their crypto, and then just watching them withdraw the funds and close the account. And frankly, if that's the kind of solution that you're looking for, you're not going to get it from us. It's not the kind of solution that we provide to our clients. Instead, if you do want to cash out millions in crypto through reputable banks, you need to be looking to establish a longer-term relationship. And that means using bank products or services, investing a portion of your holdings through the bank, or even committing to maintaining a deposit over a longer period of time. That's why lesson number 7 is that you need to motivate banks to help you. Because if the bank isn't motivated, they won't want to open an account for you. Now, that doesn't mean you don't get to make money in the process. After all, the whole point of cashing out, or at least opening a bank account with crypto-sourced wealth, should be to unlock additional benefits, which is why lessons 16, 17, and 18 are going to tell you how to use banks to reduce your taxes, increase your returns, and make even more money from your crypto with zero extra effort. But first, you need to know how to open your bank account, which is why lesson number 8 is going to help you overcome account opening problems that a lot of our clients have faced. In fact, I'm going to rapid fire 5 important lessons right now that will help you open accounts 10 times easier and faster. And to start, we're going to talk about your profile. Basically, what we're looking at here is your citizenship, your residency, your source of income, your source of wealth, where you have economic substance, and of course, where you want to bank, plus a few other considerations. And when you lay all of these factors out on top of one another, you get a risk profile. But a lot of people in crypto, they completely ignore all of these other factors, and they just say, yeah, I'm high risk because of crypto, not realizing that they're actually high risk due to a few of these other factors instead, regardless of their crypto-sourced wealth. And by high risk, I'm talking about from a banking perspective, meaning you're going to be viewed as undesirable by a lot of banks. And after you throw crypto on top of your basic profile, you've become totally off limits for these banks. So the lesson is normal restrictions apply to crypto clients too. And if you overlook this during the account opening process, you'll end up applying to banks that have no interest in onboarding you at all. But don't worry, lesson number 9 addresses this because it's all about turning down the risk dial. And after this, I still have 3 more lessons to help you reduce risk and open easier and faster. Now, lesson 9. There are a lot of factors that increase or decrease your risk profile. Some of these factors can be easily changed, like the phone number and address that you submit to the bank, while other factors are harder to change, like your citizenship, tax residency, and even your place of birth. But the point is, it's possible to reduce your overall risk profile by making smart decisions during the application process. And if you're coming in with crypto-sourced wealth, reducing other risks can make the difference between getting an account approved or denied. That's why lesson number 9 is reduce your risk before you apply. And like I said, there are different ways that you can do this. And lesson number 10, which I'm about to cover, is probably the most misunderstood because it's all about where you trade and custody your crypto. Think about it like this. Let's say you want to buy a used car, maybe a used BMW or Mercedes, and you have 2 choices where you can buy the car. One is a used car dealership run by a bunch of guys who look like they're pretty familiar with the inside of a prison cell. The paperwork might not be all there, and they seem like they're in a bit of a rush to make the sale. On the other hand, you can buy from a certified used car dealership operated by the brand that you're trying to purchase. They have all the paperwork to back up the purchase and even give you a warranty. Now, all things equal, one of these options is more legitimate and offers a higher likelihood of you receiving a clean title and ownership over your car. Well, banks look at crypto in a similar way because at the end of the day, they care where you bought your crypto. Where did it come from? How did you get it? Because buying on an exchange that is regulated by relevant authorities in a competent jurisdiction is very different from buying crypto through some random off-ramp or from a shady third party in a peer-to-peer transaction. Now, the lesson here is use legitimate platforms to trade and custody crypto. Because if you don't, it could end up limiting your banking options later on or require you to season your funds for longer periods of time with intermediaries, which I'm going to cover for you in lesson 13. But let's say you do use legitimate exchanges or platforms. Then what? Well, you're going to need to show it to the bank, which is why lesson number 11 is all about documenting your moves. I'm talking about having a paper trail, and this is probably the most annoying step in the entire account opening process for guys with crypto-sourced wealth. But there's good news, because it is getting easier. And a big reason for that is that banks are developing their own in-house tools, or they're just generally becoming more comfortable with bringing in outside help. Now, what I'm talking about is a bank's ability to audit your private wallets without you submitting any additional paperwork or information, making it really easy to then go ahead and open accounts. But if you're trading through multiple exchanges and making regular deposits from different sources onto those exchanges, you could face a lot more difficulty, which is why we always recommend that our clients start getting their documents together as early as possible, which is why lesson 11 is prepare your paper trail before it's requested. Because if you wait for the bank to ask you for your paper trail, then it's just going to slow down the whole process and you might miss your target window for opening and cashing out. Though I do need to make something clear, which is that your paper trail doesn't just include crypto transactions, which is why lesson number 12 is all about how you got your money into crypto in the first place. Meaning, how did you get your money onto an exchange, or how you purchased your first crypto? Now, I'm not necessarily talking about your crypto profile, though this obviously impacts which profile you have. Instead, I'm talking about the payment method or methods that you used and how you can prove those original purchases. See, we've had clients that have used debit cards, cash, wire transfers, ACH, peer-to-peer transfers, you name it, we've seen it. And regardless of the method, many banks want to understand two things. First, where the original money came from. And second, the transactions to back it up. And that's why lesson number 12 is you need to prove your initial investment into crypto. This is especially important if you purchased a large amount of crypto that doesn't perfectly align with your income level at the time of purchase. If that's you, banks are going to be more skeptical and they'll see you as a more complex client. But like I said earlier, if your funds have been seasoned long enough, it's possible that banks won't dig that deep. And I'm going to cover seasoning in lesson 14, right after we discuss complex profiles, which is what we're covering right now in lesson number 13. And I'm just going to come out and say it. If you have a complex profile, you need to be prepared for a complex onboarding process and to deposit more money. Now, when I say complex, I'm not talking about risk. I'm talking about layers, the layers to your profile, to your crypto profile. And we see this all the time. Think US citizen, domiciled in the US, who wants to open a crypto-friendly account for a Nevis LLC that just happens to be owned by a Cook Islands trust. The problem is that banks view this sort of structure as complex for a few different reasons. First, you have a company owned by another entity, strike one. Strike two is that you have an offshore asset protection trust stuck in the middle. And strike three is that you have an American who resides in the US at the heart of all of it. Now, if you layer crypto on top of this and then come to us asking for help cashing out your crypto portfolio, you need to be talking 5 million or more as a starting point. Otherwise, most banks aren't going to talk to you, which is why lesson 13 is that complex profiles require more money. So if you don't have money, or you don't want to commit to a large amount of money in the bank, then maybe you should stick to a more straightforward, less complex holding structure for your crypto portfolio. Or, if possible, hold it personally, whatever works best for you. And that brings us to lesson number 14, which is going to cover seasoning your crypto. This is one of those lesser known things in the banking world, and it's all about how long your money has been held in a particular account or on an exchange. For example, certain banks are willing to accept transfers from exchanges, but your funds have to be held on that exchange without any trading activity for a fixed period of time, say held in BTC for 3 to 6 months, depending on the bank. On the other hand, certain banks may require that your funds are actually held in USD on that exchange. It really just depends on the bank that you're dealing with, and maybe more importantly, the compliance team reviewing your application and their interpretation of the bank's policies. Now, this sort of approach is not going to work with all banks, but we have seen it work with banks in legitimate banking hubs, and it can even help you if you're coming in with lower deposits, say between $100,000 and $250,000, which is why lesson number 14 is that seasoning your funds can help you open accounts. But it's not a guaranteed way to open accounts, because not all banks will view holding your funds with an exchange as an acceptable step into the bank. Instead, they may require you to hold your funds with another financial intermediary or even another bank first. And that's what we're going to cover in lesson number 15. Then I'm going to be jumping into everyone's favorite topic, taxes. We're going to cover the good and the bad. But first, intermediaries or other bank accounts. Now, this is a strategy that a lot of people overlook. Think of it this way. If you have all your money on a crypto exchange, but you really want to use that money to maximize your benefits. But the banks you want can't accept deposits from an exchange. Then it's time to find another bank that can act as a bridge between your exchange account and the bank that you actually want to open with. And this is required more often than you think because a lot of banks, especially the cautiously optimistic banks, they won't accept transfers directly from crypto exchanges or wallets, even though they're willing to onboard clients with crypto-sourced wealth. Basically, they want to see that another regulated financial institution has done their due diligence and essentially de-risked the situation by receiving the funds from the exchange already. That way, this new bank, the one where you expect to start extracting value, can just receive fiat transfers from other financial institutions. Which is why lesson number 15 is sometimes you need to use a bridge before opening the best accounts. Now, this isn't a great outcome for the bank that's acting as the bridge between your exchange and the final account that you want to open, but a lot of these bridge banks, they do charge fees for onboarding, so they end up making money in the process. All right, now as promised, we're going to talk about taxes. And that's the subject of the next 3 lessons, including your tax obligations, getting an opinion, and then most importantly, how you can use banks to reduce your taxes. But this is not tax advice. So before you end up making any decisions or changes to your plans, make sure you speak to a qualified tax advisor so they can help you decide the best approach that fits you and your unique situation. And first up is lesson 16. And here I want to talk about you, your personal situation, and your tax obligations. And again, talk to an advisor because in almost all cases, our clients, they've already optimized their tax situation, meaning they already have established tax residency in a territorial tax, a low tax, or a no tax country, or at the very least, a country where crypto profits are not taxed. And that means cashing out their crypto is almost always a question of unlocking the best banks and the most benefits instead of attempting to reduce taxes. So lesson number 16 is you need to confirm your tax obligations before applying for accounts. Because the last thing that you want is to cash out your crypto and then just get hit with a massive tax bill. Though like I said, I'm going to explain how the right banks can help you reduce your taxes in just a second in lesson 18. But first, how do you even know what your tax obligations are? Well, lesson 17 is all about this and how it can help you to open bank accounts. Because banks and other financial institutions, they often rely on other professionals to provide certification of someone's financial position. And when it comes to taxes, one such certification can be a signed letter from an accountant in a relevant jurisdiction confirming your obligations and whether you've already met those obligations or not. Now, this isn't always required, and it isn't always going to help you, but it can, especially if you have multiple overlapping jurisdictions or you have tax residency in a jurisdiction that lacks regulatory clarity. This sort of letter could be the final bit of supporting evidence that a bank needs to see in order to get comfortable with onboarding you as a client. Which is why lesson 17 is get a tax opinion or an accountant signed report to give yourself some reassurance and to also help the bank get more comfortable with your profile before opening. And this brings us to lesson 18, where we're going to discuss how certain banks can help you reduce your taxes. Now, I'm not talking about pre-2008 UBS tax reduction strategies. I'm talking about legitimate, 100% legal tax reduction strategies that are available to basically everyone on the planet, if you know which banks to use and you have enough money to unlock these strategies, because not everyone does. And the strategies that I'm talking about, they include leveraging your crypto portfolio through asset-backed financing or Lombard loans to avoid capital gains tax, allowing you to invest further, allocate funds anywhere, or simply pay for day-to-day expenses while continuing to hold your underlying assets, in this case, crypto. And this is really the most basic strategy that almost anyone can unlock, though different banks obviously impose different terms. The key considerations here are the total value that the bank is willing to lend, say 50% to 75% of your portfolio, the rate at which they'll let you borrow, usually a couple percentage points, and then how long they're willing to lend to you, which is typically on a rolling basis when it comes to this type of facility. But the lesson here is that the right banks can help you reduce your taxes with tried and tested strategies that have been adapted to crypto. Of course, there are other important considerations like your comfort with borrowing against your portfolio, the volatility in the market, your ability to meet margin calls, and your willingness to custody your crypto with the bank in the first place. Which brings us to lesson number 19, which is probably the least known lesson I'm going to cover in this entire video. But before I share this one with you, since you have made it this far in the video, don't forget to subscribe and give this video a like so we know to keep making more crypto banking content for you. Okay, lesson number 19. It's all about options, your options. that you can consider instead of selling your crypto. And that's because crypto-related banking has become significantly more sophisticated, meaning you don't have to sell your crypto in order to unlock other benefits. Instead, you can directly deposit and custody your crypto with some of the best private banks in the world. And depending on where you open, these banks can then offer you a wide range of crypto-related services, such as access to staking and yield services, unlocking liquidity through various financial instruments like Lombard loans that we just discussed, or on-platform trading of most major cryptocurrencies with 24/7 settlement. And since we're talking about cashing out crypto, the most important feature is that you can cash out your crypto if you want to, directly into your bank account at the same bank. No off-ramps, no middlemen, and no other questionable parties are needed. And that's why lesson number 19 is that you don't have to sell your crypto, at least not right now, unless that's what you want to do. And whether you do or don't doesn't really matter, because private banks in sophisticated markets can offer you flexibility, whether you're ready to cash out today or in 6 months or never. Now, you might be wondering, how is this possible? And if these private banks in Europe can do it, why can't other banks? Well, that's what we're covering in lesson number 20, because there is one thing that sets these sophisticated private banks apart from the rest. Again, we're talking about level 4 crypto banks here, banks that actively want crypto clients. And the secret ingredient that these banks have that all other banks lack is an in-house team that not only understands crypto, but is mandated to support crypto clients. More specifically, we're talking about compliance. Now, I know that compliance teams are supposed to be the boogeyman of the banking world, swooping in at the last minute to crush your application and making it impossible for clients with crypto source wealth to open accounts. But if you open at the right banks, compliance teams can actually help you open accounts. And that's why lesson number 20 is that compliance teams are your friend. And that's why when you're dealing with these crypto-friendly banks, you should do your best to help them understand your profile and get comfortable with your trading history, because it will end up helping you in the end. Though I should warn you, even the best compliance teams can help you overcome problems with your profile, which is what I want to address in lesson 21. Because it doesn't matter if you're from the US, Canada, EU, UK, or any other high-tax country. If you're thinking about cashing out crypto, you need to be very careful where you decide to open accounts. Because every aspect of your profile, crypto or otherwise, is going to impact your application and will ultimately lead to rejection or approval. I'm talking about citizenship, residency, employment history, how you're structured, and even where you decide to apply for an account. Not to mention whether you plan on cashing out or you want to use your crypto in some other way instead. And the better informed you are before you apply for accounts, the more freedom and flexibility you're going to have and the more of your money you'll be able to keep. And that's why lesson number 21 is that when it comes to cashing out crypto, you need to know all of your options. And the fastest way to know what options are available to you is to fill out your free assessment using the link in the description. It's going to take you 2 minutes to complete the form, and our team of banking experts will get back to you in 24 hours with an assessment of your profile, along with your banking options. It's 100% free, so it's really a no-brainer. So click the link, go fill out the form, and then come back here so I can tell you the dirtiest lessons, even secrets that I haven't heard anyone talk about when it comes to banking. Okay, lesson 22. Now, a lot of people hesitate to talk to bankers about crypto because they think that crypto is still too taboo. Now, I want you to remember, I spend my days talking to bankers. It's literally what I do. And most of the time, we're talking about client profiles, onboarding policies, bank preferences, etc., etc. But we also talk about them, what they find interesting, what they're investing in, what they like. And what a lot of people don't realize is that bankers, at least the good ones, they're pretty libertarian. They want light restrictions, maximum freedom. And that's why lesson number 22 is that bankers secretly love crypto. So they want to help you navigate your banking and successfully open accounts, if their banks, or rather their compliance teams, let them. And like I said in lesson 20, if you choose the right bank with competent compliance teams, you can not only open accounts, but you can also unlock a lot of value in the process. But guess what? Even the banks that aren't actively onboarding crypto have secret projects that they're working on. And lesson 23 is all about these banks. I'm talking about popular international banks and offshore banks. Now, I'm not going to name names, but you would know them if I said them. And the reason I'm bringing this up is because I want to highlight the fact that it's still early. There's still a lot of fog in the regulatory environment, but a lot of banks are getting ready because they believe there's a huge opportunity to support clients with crypto-sourced wealth. I'm talking direct custody services, trading, leverage, staking, yield farming, and I'm hearing about these services directly from senior bankers, banks that are already building this infrastructure behind the scenes. but they can't push it to the public until there's regulatory clarity in the relevant jurisdictions. So I guess lesson 23 is twofold. First, we're early. And second, banks secretly love crypto too. But banks don't operate in a vacuum. And their support for crypto, it's going to ebb and flow depending on what regulators let them do. Which is why lesson 24 is all about regulations, or rather how regulations change. And this is super important for anyone who is relying on their crypto wealth to fund their retirement, make major financial decisions, or just make a major purchase. Because while crypto might be supported in your country of residence today, it might not be supported in your country of residence tomorrow. Public opinion, political will, major fraud cases, all of these have the ability to shift regulation, which can directly impact your ability to cash out or otherwise benefit from your crypto sourced wealth. So lesson 24 is be prepared for regulatory changes. And as you probably already know, there is one step that everyone can take in order to prepare, or even better protect themselves from regulatory changes. And that step is what we're going to talk about in lesson 25. But first, since you've almost made it to the end of this video, if you're getting any value out of this, don't forget to give us a like and drop a comment if you want us to cover any specific crypto banking topics in the future. All right, so the one step that anyone can take to protect themselves from changing regulations is to open backup accounts. I'm talking about accounts in different countries, ideally in countries with different regulatory regimes that are independent, strong, and financially stable. As a quick hit list in terms of what you should be looking for when deciding where to open backup accounts, you need to see competent regulators, a relatively stable currency, decent financials at the country level, strong banks that are familiar with foreign non-resident account holders, stable correspondent banks for facilitating international wires, and if you're coming in with crypto, regulatory clarity to ensure that banks can continue to support you. If you open backup accounts in countries that tick these boxes, you can be confident that your financial position is going to be stable and you'll be able to benefit from your crypto whenever you need to. And that's why lesson number 25 is always have backup accounts. Because if you don't, you could end up with all of your money frozen, locked away by a single bank, inaccessible until you open another account where those funds can be sent. I've seen this happen many times, and unfortunately, if you have a high-risk profile, it takes weeks, even months to open new accounts. But backup accounts are not a silver bullet for everything, which is why lesson 26 is so critical, especially if you plan on sending large transfers. Because before you send transfers, whether it's crypto from your private wallet to the bank's receiving address, or even fiat withdrawals from an exchange to a bank, you should always send a test transaction before withdrawing all your funds. Otherwise, you could be stuck in a situation where the bank and the exchange need to execute a search for your money. Sure, you'll almost always get your money back, at least in the case of a wire transfer, but it's better to be safe and take the time to test before you send. Which is why lesson 26 is trust but verify with test transfers. And I'm saying this because even when you're using a regulated custodian or a crypto-friendly bank, always send a small test transfer first to confirm the wallet address is correct and under their control. You can't reverse a blockchain transaction. One typo or miscommunication can result in a permanent loss, which could be an extremely costly mistake. So just do a test. Okay, now so far we've discussed lessons about cashing out crypto and a few secrets involving crypto banking. But the thing about cashing out and banking crypto in general is that it's still banking. And that's why lesson 27, the final lesson, is all about international and offshore banking more broadly. And what I'm really talking about are the steps you need to take, the important considerations you need to think through, and the mistakes that you need to avoid before opening an offshore, international, or even a private bank account. And while thinking through all of these factors sounds like a lot of work, it's not. Because I've unpacked them for you, including anecdotes from my own banking mistakes, things I've learned from friends, and feedback from helping thousands of people bank offshore. So lesson 27 is for you to watch this video right here in order to fully prepare yourself for international and offshore banking. Otherwise, you could end up making a huge mistake that costs you your application or ends up losing you a lot of money. So give that a click and I'll see you over there right now.